So if I had to start all over again, building up a $7 million real estate portfolio, some things that I would have changed or did differently. It's not a lot, honestly. One of the most things was I would have did a couple more flips per year than what we're doing in the business, right? So my name is Lamont. I'm from the west side of Chicago. We have about 30 rental units to date. We've been doing real estate since 2018. I bought my first property in 2018, and it's crazy because I actually started this journey when I turned 25. Prior to, I had got expelled from 2 colleges. I went to Northern Illinois, I got expelled. I went to 𝐾𝐨𝐬𝐭 College, was a community college, I got expelled. But I didn't want to just be a statistic to say. So when I came back to the city, I ended up going to Robert Morris University. It's like an accelerated program. I end up getting my associate's degree in applied science. I made the dean's list and everything. But, it's just silly me. I end up, catching my last case, and this was like in 2013, so I couldn't walk across stage. I just kept running into issues with the law, rather. So around like 2014, 2015, that's when I turned 25. I just said, let me just start taking my life serious. And I wish I would have started earlier. So for all my young people out there, learn from our mistakes. Wait. Let me introduce myself. My name is Lamont Lashley Jr. I'm a social impact real estate developer and a 7-figure entrepreneur. In the last few years, I've been able to scale my real estate portfolio to over 30 rental properties valued at over $6 million in just a few short years, all by leveraging credit. I've started a community, and I want to invite you to for less than $2 a day. All you have to do is text the word group to the number below, and I'll send over the details for you. If you find yourself struggling with removing late payments, collection, charge-off, bankruptcies, and different things like that, or you find yourself having difficulty getting approved for funding, let me work with you so that we can help you reach your desired results. So other than that, I don't want to hold you up. I want you to get back to the video, and I look forward to working with you in the near future. Just start earlier. Do the things that your parents and your elders are telling you, because it could save you a lot of time and a lot of money. I lost a lot of money, just getting in trouble with the law and just spending my money on dumb stuff. You know what I'm saying? So starting at 25, I started reading books and learning everything about credit and real estate. I read a book called Rich Dad Poor Dad. One of my uncles started helping me work on my credit, which was crazy, because I remember like it was yesterday. I tried to go trade in my Porsche truck that I had at the time. I tried to get a dealership, I think like $7,000 to $10,000, but my credit score was only a 493. So he said that would nobody take on his loan. So I set out to say, you know what, I don't want to own a car for until I can buy me an investment property. So I end up not having a car from 25 to 30. So you got to be disciplined, and you got to give up something to get up. That's my message to everybody. And your chapter 1 don't determine your chapter 10. I would have never, thought that I would have, made it this far. But because I'm disciplined, and because I understand that life has its ups and downs, you just got to stay consistent. The ones that become successful are the people that stay consistent in this thing. So, as 25 going all the way to 28, I was studying, learning things about everything credit and real estate. I read a book called Rich Dad Poor Dad. I hope everybody read it. And it taught me about acquiring assets, rather than liabilities. And I feel like that was new to me. I never really understood the concept. And since then, I just been trying to acquire as much assets as possible every single day, moving forward. So we bought our first property in 2018. For $20,000, me and my uncle, 𝐬𝐮𝐬𝐫𝐷𝐿 Lashley Sr. He came with $10,000, I came with $10,000 cash. And what happened was we had to rehab it for $80,000. He came up with his $40,000, but the $40,000 I used was for my personal credit cards, and it was the worst thing I could have did. So everybody that is, building your that's trying to get up in this real estate game and you rehabbing properties, do not use your personal credit. I highly don't recommend it. At the time, we couldn't refinance out of the property, so we still own it outright in full right now. My credit score tanked terribly, and I couldn't get access to funding. So shortly after I started doing credit repair in 2018, And I started making me some decent money doing credit repair because I got myself up in a good position. And it's a good it's a good need-based business. So I recommend, like, if you can help yourself increase your credit scores, like, look into it. I got one of the best programs out right now that's helping people clean their credit up quickly, and getting access to funding, right? So we can, fund our businesses or investment, like real estate investments and things like that, right? So once I started doing credit repair, I paid down on my cards and I started learning about business credit funding. I started using net 30s and NAV accounts, but that's when I learned that 90% of lenders, they still go off your personal credit report. And that's why I just recommend all my students, we focus on what's called PG funding, that's building your own personal score. And we use that to get business credit funding. If you get into real estate, you need to learn about business credit funding. That is how you scale and get to the next level. And like I said, just starting over, ultimately, I've come to learn by doing real estate at this capacity that, like the cash flow that's coming in, it's more so like a cushion, right? But the reason why I said I would rather do 1 or 2 flips, because that's going to give you your big lump sum of capital so that you can keep the business going. I find myself with certain times, putting more money into the business versus if the business would have been generating a nice load of income with the fix and flips, you know what I'm saying, then that would have helped, helped us grow. We would have had more access to capital, to do other different things. I've also made mistakes where I went into trucking and lost over $100,000. So like don't try to do a bunch of different things at once. Like, focus on one thing and drive that up and all the way up into the top. Like, that's what I recommend, because, I probably been a little bit further if I didn't have to, reset and kind of catch back up from all those losses or that excess money that I was spending, right? But now I see how well, since we did a couple flips in 2025, we made over $300,000. But it's a lot of stress that's taken off of us. You know what I'm saying? And it's helping the business grow substantially. Like, just even for like vacancies, repairs, like it removes that stress. So I even recommend, you know what I'm saying? Like, if you do get a buy and hold property, let's focus on doing a fix and flip, the next property or two so you can get that capital, or, even having access or reserves of up to $50,000 to $100,000. That's going to put you in the best possible position. Now, if you are working a 9 to 5, let's leverage that, that job, because that's your first business partner. And, that we want to acquire real estate from that. I prefer you get a multifamily property, because that's going to set the foundation for yourself, and that's going to put you in the best possible position to win. So hopefully, that's the route that you take, right? That's going to set you up, and that's going to set your family up, and that's going to really start you on your path to building generational wealth. But overall, since understanding that concept that flips are important, every real estate strategy is important. So you have to study your market and ultimately study these different strategies, because they can become very beneficial to your real estate portfolio. And even like wholesaling in some states, people have access to that. That's going to show you how to find good deals, and that's going to lead to you making more money, because you have those cheap deals and you can find those good deals, and now you have active income. You're going to need active income as well as you need passive income. So wholesaling, buying and selling, doing fix and flips, or doing buy and hold status. That's how you truly build wealth. And you just got to understand, what type of person you are and where you're at. Because I got, a friend that might come to me, he got $500,000, $600,000, and I'm saying, hey, bro, get you a couple buy and hold strategies so you can, offset your income, and take advantage of those tax advantages and stuff like that. And I got younger guys that come to me like, oh, I got $10,000, $15,000, $20,000. Well, partner with somebody, get educated on real estate, because having a mentor is super important. But, let's build up that liquid capital and reserves first. You know what I'm saying? Overall, just doing fix and flips has truly started to change the trajectory of my business. And, that's like the biggest lesson. And the thing I would have really learned is, and those are the big takeaways, is understanding business credit funding, understanding all the strategies of real estate. These are things. So if you got any questions, if you want to, drop some opinions, some different reviews on it, if you agree with me or disagree, let me know in the comments. This channel is definitely to provide you information when it comes to building your credit, investing in real estate, and securing funding, so you can, just move forward in those different areas. So like the channel, subscribe, You know, make sure you share this, and I look forward to the next set of new investors that's coming after me. I'm going to be sure to keep sharing that game. So I'll see y'all on the other side. Let's get it.